Hi, this is Joseph. It is Saturday, April 11th, 2015, and we're going to do a quick weekend wrap up. And what our expectations are for the open on Monday for trading. What we're looking at right now is the euro dollar. This is the daily chart. So the last trade that we executed with the trade copier was a euro dollar sell trade, and that was several hours before the close of trading on Friday. What we actually got was a signal candle. So this was a continuation breakout trade. You might have seen this particular strategy that I use on the website. So basically what I'm doing, and I'll go ahead and detach this so we can go right to that candle. What I'm doing is identifying a range of consolidation, which we had here. This is on the daily chart, by the way. So it works just the same way. So as I'm trading for day trades with the HL30 and the continuation breakout trade on the 1 hour time frame, I'm also looking for these same patterns, specifically the continuation breakout trade on the daily chart and the 4 hour chart. Now I don't use stop loss based on the daily chart because, as we all know, I mean, in order to use a continuation breakout trade on the daily chart, we'd probably have to use anywhere from possibly 150 to 200 or 300 pip stop loss. I don't do that. So what I do is identify the actual signals here on the daily chart, which could give me an idea of what to expect for the following day or the trend or the breakout. And then I switch to the 30-minute and look for an HL30 or a continuation breakout trade on the 1 hour time frame that is in the same direction as this signal that I see here on the daily chart. And that's what gives me a better opportunity to trade the trending move, verify what I see with the larger time frames, and then use nothing larger than a 55 pip stop loss. So I never use a stop loss larger than 55 pips for all day trades, even on the HL30 or the breakout. So here we had a breakout, which was Thursday's close, and then we had Friday's trading action here. So the only thing that I really had a problem with is that on the continuation breakout trades, regardless of how big the range of consolidation is, obviously here again on the daily chart it's going to be much bigger, but regardless, I'm still looking for the possibility of more follow through and a bigger overall move. Yet we still see support down here from March 13th of this year. That low is at 1.0462. So in order for me to really expect that the trend's going to continue, I need to see additionally candles closing below that all-time, or that this most recent low. I shouldn't say the all-time, I'm sorry about that. The most recent low here on the daily chart. So we're only going to trade it still as a continuation breakout trade, but expecting much less than we would normally expect if there was quite a bit of room before price runs into either support in this case or resistance. It depends on which direction we're trading the breakout. And at the same time, you'll also notice that with the three forms of indicator confirmation that I use on this continuation breakout trade, the first thing that I look at is the Bollinger Bands. And the Bollinger Bands on the initial breakout signal candle, they have to be separating away from each other. And on this chart, they're not doing that. And they weren't doing that on several other charts that I used for confirmation. The Bollinger Bands need to be separating away from each other. That shows a sign of strength. It doesn't necessarily mean that it won't drop any lower. It just means be careful. And in this case, there's my area of caution, which is that support level. I've got to be careful trading this into support. I want to make sure that I lock in profits. So on Friday, when we executed with the trade copier, it was a breakdown on the 1 hour time frame. And again, we didn't hold it indefinitely or through the weekend. We took our profits on the same day. So there is a little bit of divergence on the initial breakout. And what that tells me leading into possibly next week is that we might see a little more range bound consolidation. It may come down and test support this week or this coming week or the following week, overall support, and then eventually it may just take it out altogether. But we were talking about this even last week, is that there was the possibility that price would come back down and possibly retest that support level. Not necessarily taking it out, but just retest it. And so far, we're actually witnessing that so far, that price is retesting it. We don't have it confirmed that it's going to take it out just yet, or that it's going to bounce just yet. So I'm not looking to trade a bounce either until I have solid confirmation. It might give me an opportunity to trade a bounce on the open, which would be, let's say, on the 1 hour time frame. This is our 1 hour chart for the euro dollar. It might perhaps give me an opportunity to trade it back up, which again would be a bounce, a short-term bounce. And I'd be looking for this high, this price swing high right here. I'll go ahead and open up this chart so you can see exactly what I'm talking about. That price swing high here on Friday, which was at 1.0636 approximately. and then of course that low from last week, which is at 1.0566. And that's sufficient. That's okay. It's not too tight a range. It might spike up one more time and then pull back down, and it might create a range of consolidation here for the new week that I could then wait for a 1 hour candle to close either above resistance or below support. I'll update you next week on that resistance point, wherever it might be, because again, with this resistance point that I have right now, that's just what I see on Friday close. It could change. There could be some price action where price would come back up, push that range, and I might have to make an adjustment to that resistance to incorporate that overall high. And then it might go sideways on Monday, and then it might not give me a breakout until Tuesday or Wednesday. When we trade the breakouts on the the euro dollar, we normally trade to a 55 pip target. So we do earn double what we normally earn on those short-term HL30 trades. And again, the HL30s are just trades or bounces off of the previous day's high and low, which is also a possibility. If we look here on the pound dollar, the pound dollar looks a little bit different in the sense that it actually closed at support. So you remember this spike, I believe this was March 18th, that's right, March 18th. We've been looking at this trading day, this March 18th high and low, for a couple of weeks now. And it actually was the basis of a consolidation range that I was using on the 4-hour chart, waiting for a candle to break outside of this range right here. Let me open this up one more click. There you go. So you can see here on the daily chart for the pound dollar, I was waiting for a candle to close outside of this range. Now this candle here on this particular chart shows a low of 1.4634, and Friday's candle actually closed at 32, 2 pips below that actual low. So it closed just about right at it, maybe a few pips lower than that, and that was actually a signal candle to sell this pair. So let's take a look at what we were looking at on the euro dollar. The first thing I do on a signal candle, which would be a breakout, again here on the daily chart, is to look at the Bollinger Bands. And the Bollinger Bands are separating away from each other on the close of this signal candle. And there's no CCI divergence, and the MACD histogram is confirming as well. Now, I wouldn't immediately start selling this off of the close. The way I use this strategy, this continuation breakout strategy, is to wait for price then to come down about 3 pips lower than the low of the signal candle. So the low of the signal candle is 1.4586. So I would not enter to sell this pair until 83 approximately, when price comes back down, because it's possible that when the market opens for trading on Monday, it could pull right back up inside a consolidation. It may not cancel overall this signal. It might take a few days for it to come back down eventually, but I'm going to be watching this level throughout the week. Remember, the low was 86 right here. I don't think this is going to let me stop right there at the level that I'm looking for. There's 85, so it's pretty close. 3 pips below that signal candle, that's going to be my entry. So if it happens Wednesday, Thursday, Friday, I'm going to be aware of this. I have a price alert so that when price comes back down, I know that I'm looking at this larger time frame sell opportunity here on the pound dollar, and it may continue to trend for a few hundred pips. Now, again, we're going to trade it on an intraday intraday strategy using the continuation breakout trade on the 1-hour time frame. Again, earning 55 pips to a potential target. Now, if this trend continues, it's going to give me the opportunity to continue to confirm with what I see here on the daily chart to hold on to those trades just a little bit longer, and I might be able to squeeze out more than just 55 pips on that breakout trade. But I'm still going to use the 55 pip stop loss. So we'll do another update after the market opens on Mondays to take a look at these two currencies to see how they turn out. If you like this video and you want to get more information about these trading strategies, please click the subscribe button so that you can get instant notification when I put up a brand new video tutorial. Or you can visit my website right now by clicking the Visit My Website button, and I have some free trading manuals for you and extra video lessons with some special discount offers to use my Forex signal service that will automatically execute all of these trades for you onto your MT4 account.